All right. Hey, everybody. Listen, Bobby, everybody, this is Bobby Yanover. We cannot thank you enough for being with us today. Before we get started, I just wanted to introduce everyone to you if they haven't met you in person yet. Bobby is a fellow Oiler, NEPA Oiler, but he is a licensed public accountant, and this is his 50th year in accounting. He is an expert in tax law and businesses and estates. So we are so lucky to have him here with us because we get questions all the time about taxes and living as an at-home business. And we actually have an expert who's an actual accountant here to answer a lot of the questions that you guys put in. So thank you so much for being with us, Bobby.
My pleasure.
I just have to say, I heard a really cute story about how you got involved in accounting at age 14. Is this because you didn't want to go to camp?
Very true. One day at age 14, I said to my dad, "Dad, I don't want to go to camp this year. I want to work for you." And I think at that moment, he saw his golf game going right downhill. So my father was not one to say very much. He stormed out, but he came back that night with 2 books, dropped them on the kitchen table, and said, "Learn them." And I learned them, and every morning he would spend the morning going over quizzes, and 2 weeks later, I was in that office working. So that's how I started my career. And then he did the same thing to me in December for tax season. He came in with 2 books, dropped them on the kitchen table, and said, "Learn them." And that's how tax season started.
So we have you for about a half an hour this evening. We know that you cannot shove 50 years worth of education into our brains, nor will we become the expert. But I'm hoping that you could tell us what we need to do so that when we see an accountant at the end of the year, we have everything that you need to make magic happen on our taxes.
Well, I've had clients whose brains totally fry after 2 hours. So we're just going to keep it to 30 minutes so these people can get home and have a good night's sleep. What is often asked of me is, like, what oils do I use? Because I'm one of the few accountants that is an oiler. And as you can see, my closet is full of oils. But when it comes to working, clarity is a phenomenal choice. And so is believe and abundance. And marjoram for getting rid of those negative thoughts, because every day is a challenge.
Absolutely.
And there's just so many good oils out there to help you.
All right. Thank you. That is such a great tip. Oily accountant. Oh, and just because I didn't mention it earlier, many people know know Bobby as Yan the tax man. I think I might have to label this 30 minutes with Yan the tax man.
Well, right. That comes from when I was in 7th grade. There were 5 Bobbies in my homeroom, and every time the teacher would say Bobby, the 5 of us would say, "Yes, teacher," in unison. And that quickly stopped when he pulled us all out of class one day and said, "Every one of you come back with nicknames tomorrow, or else go right to the principal." And so that's where YantheMan started.
I love it. All right. Well, let's get into it. Tell us what's new with technology. That was where we wanted to start.
Well, I first want to preface that this talk is geared for those who are brand new in business. Although everybody who's been in business, you're bound to learn something. All you got to do is learn one thing, and the seminar is worthwhile. I've always said that. So let's start with technology. And I want you to, first of all, don't believe in free tax returns that are on TV. Because what they're really doing, it's not free. They're selling your personal information to people like furniture, insurance, mortgages, retirement, and all of a sudden you get phone calls of salespeople trying to sell you all this stuff. So they're selling your personal information. It's not free. Now what you have to do is everybody has to read the user agreements that they all skip over and they go, boom. And this leads to so many problems. So every time you got to read that user agreement, and sometimes it's just not worth it. Also, get an accountant who will guide you, not just how fast and how cheap they can push it out the door, but pay for service. Get an accountant. Number two, stop using public Wi-Fi. Huge problem with identity theft. So when you go to a coffee shop, a restaurant, a hotel, everybody who's in that area, the surrounding area, not just in the building, has access to your phone, computer, whatever you're using. You're asking for identity theft. And once you're sharing, you're giving actually access to your devices, and they can come back, and they can come back later and get more. Hi, Mama Cat. Can you see the cat? This is Mama Cat, who comes to most of my consultations, and she has no qualms about jumping right in.
Of course.
I'm hoping she won't step on the keyboard. Let me see if I can give you a good picture of her. Here she is.
Oh, you're such an angel.
Anyway, so she's my partner. She has a little place to lie down right on my desk in the other room. But identity theft is very serious. In fact, the IRS has mandated that we have a clear desk because they're afraid of other people stealing information off the desk. So we're no longer allowed to have anything but a clear desk when we meet with clients. And there's others, but we'll get to it. But also, your own personal Wi-Fi in your home or office, stop giving out the passwords to everybody. Because what they're going to do is, oh, you know, my kid's in the car, I'm going to give him your Wi-Fi password so that he can go and all of a sudden you're getting hacked. So not good idea to do either of those. Passwords and PINs. I'm a firm believer that you should have it in writing, on paper. In fact, if any of you don't have it, I have a very simple system that I created years ago. I'd be happy to get it to you. Having a stored offline or on a thumb drive, on paper, pins and passwords, there's nothing more secure. And you can even reduce it on your copier and fold it up and put it in your wallet. I have 8 pages on one page shrunk down that I can keep in my wallet just in case. Or you could go for a secure online system like Dashboard that you have to pay for, and they change the encryptment every time you use it.
Wow.
Which is really secure. Again, always read the terms of agreement before clicking that go button. And with identity theft, so many people are concerned about it. They're using services that are advertising on TV, but even they've been hacked. And they've got huge lawsuits that they had to pay out money. You're so much better off just freezing your account on the 3 credit bureaus. Okay, and there's no charge for that. Email. When opening files, it becomes very dangerous because you don't know what's attached to those files. So what they've made us do as accountants, because our information is so sensitive, is we have to open it on a separate computer that has nothing else on it, that if it does open and something's in it, it won't affect anything else. So you can do that by using an old computer or an old tablet and open up your emails on that so it's secure. Or at the price of machines today. I know you can buy for $100 you could buy one that's been refurbished. And anybody will tell you that once you have identity theft, $100 is a bargain. It's really nasty. Online invoices and receipts. like our own Young Living bills, or when you buy something from Amazon. Most people forget about the invoice. They don't keep track of it. It's not going to be there very long. You know, they delete it or they don't have access to it. So that when you want it for proof, like in an IRS audit, it's not there. So you need to print it or save it or take a screenshot with an app, and it's permanent. Done. Because they just may not be available in the future. So we should go on to record keeping.
Yeah, we're so everyone's really excited to know what's new with record keeping. I know that the days of me.
Peppermint.
Pure peppermint oil.
Peppermint and water. Since you gave me this about 2 years ago at one of our little
I remember
soirees. I've used it every day ever since, and usually I'm drinking peppermint all day long.
Nice. That was my silver retreat. So I know that I'm moving right now, and I have files and files of old receipts and invoices like you just talked about from years and years ago that I have to keep for how many years do they say? Like 7? I've been keeping them for 7.
Well, that's a good theory. And as long as you don't get in trouble or you don't get audited and you don't have to go back past 7 years, that's a great rule. But when you need the records, you need the records.
Yeah.
So when you have Social Security issues, like when you're much older, in my case, not so much older, and you have to prove things like they're missing one of your tax returns, you got to go back and pull it out. All right? So if you have a problem with your pension, or if you have problems in an IRS audit, yeah, 7 years is good for actual records, receipts, and stuff like that. Permanent, forever, are tax returns.
Really?
Mortgage documents. I just had an audit not too many years ago, and 25 years before, when there was this building bought, the IRS agent wanted to prove every single expenditure that made up the depreciation of the building and all the improvements in the major construction. How are you supposed to pull all those records out from 25 years before when you're throwing out documents after 7 years?
Right. Well,
so yes and no.
I'm so glad that I have switched over to everything digital. So I still have a lot of those old documents, but what you just said made me realize that I should be probably scanning my old my old tax returns, and even my old mortgage information. And I mean, now we have the technology that we can keep it all on a little thumb drive and not worry about it. Right. So I guess that leads us right into our next question of like, what's new in technology and what's new in record keeping? And for people that are just starting their own business, what are their first steps?
Okay. Well, what's new in record keeping? Apps. Apps are the newest, greatest single thing. So I want you to, if you're going to be, shall we say, modern in today's technology, use an app. Use it right now. Use it every day. Use it for every trip and every expense. In other words, make it part of your life. And you won't have to keep other records. Now, once you make it part of your routine, you're going to do it for everything. Even when like you go and put $3 in the parking meter in quarters, you're going to take a picture of that and put all the information in, and you're good. Otherwise, how are you going to prove $3 in coins? It just isn't feasible. So there's no time to do it later. You won't be able to make it up, and you're looking at a nightmare of restoring records if you wait. And wait until after the tax year is over and trying to do it, and remember, gee, where did I go in January of last year? Well, that's a tough one. Most people can't remember their breakfast. So for years, I've said to people in my business and my practice, but probably for 20-some years, if you only keep track of your cash paid outs, you'll have 20% more deductions. And it's absolutely true, because everybody goes to the dollar store. They buy something for $1, a pen, a battery, a squirt bottle for oils. And they don't keep track. They take a little piece of paper, and some of them don't even bother taking it home with them. They just throw it out. Well, that's your proof. And if you think that the charge on a credit card statement or a debit card checking account statement is proof, that's not how the IRS looks at it. They look at it as proof of purchase, but not for proof of your business. It's not business, it's personal. Oh, well, how much money did you just throw out in that last year? So, you're talking about keeping track of your miles, your cash payouts, your debit and credit cards, your credit card charges, checks for business and personal. Well, that's a lot of stuff for one thing to do. And I've tried several of these apps. I think TaxSpot, for everybody I've met, is the easiest. It tells you what to do next. They have training, actual training. You can watch videos and learn how to use it. Everybody else, like, you got to go figure it out. And that frustrates everybody. Especially if you're over 40. There's nothing to remember, which is really important in our little immediate society. It even tells you what to do next. And if you forgot something, it reminds you. You get an email. Oh, you forgot to do this. And you can go back and change things. You can go back and change things. Isn't that wonderful? You know, everybody forgets that some of this stuff can be erased and some can't. Well, so it comes with a great chart of accounts, TaxSpot does, and you can add to it very easily. You have to remember that the chart of accounts is the first thing you want to set up according to, like, your tax return and your business and your rental real estate, if you have it, or whatever else you got. The chart of accounts is key. That's the first step. So what TaxSpot also does, it allows you for more than one business or more than one rental real estate or both. It allows for more than one vehicle. So if you happen to be like me, that you're operating in 2 states and you have 2 cars and you just have to push a button and you're posting for the other business or for the other car, which is terrific. And it also allows for several bank accounts or several credit cards. And some of the others just don't do all this. And there's also many reports you can use to summarize your totals. All you have to do is use it. Get used to it and use it. And if you use it, a lot less headaches. You won't have that headache tomorrow or the next day or the next year. And it's a lot better than procrastinating. Remember what Ben Franklin said, never put off till tomorrow what you can do today.
Well, I don't know if I take his advice all the time, but let me just tell you, since I downloaded TaxSpot onto my phone, it has been completely revolutionary, because I used to have piles of receipts on my desk that I would wait. I would even like to say I did them every month, but I didn't. It would be like every 3 months, and it would take all evening, and it was horrible entering them all into my QuickBooks on my desktop. TaxSpot I could access from my desktop, but through my phone I could easily take photographs of receipts and then crumple them up, throw them away, put them in whatever category. My mileage gets tracked automatically if I want. And then at the end of the year, just like you said, it's digitized, but I could also print it out in an audit report. It's all categorized. So when I hand over my taxes to an accountant, how much did you spend on advertising? Oh, here you go. And then in the back, all the receipts are there. So they call it an audit safe tax report at the end of the year. And let me just tell you, it beats those files and files and files and shoe boxes that I have of receipts upstairs still.
And what's great is that you can take a pocket full of receipts or a purse full of receipts at the end of the day and just lay them down, click it, and post it to wherever it's got to go.
It's so funny because even on my kitchen table, I have receipts I need to put from the other day. My little Amazon ones, because this was business related. I mean, it all adds up, just like you're saying. All of it,
Right.
dollar store ones, all of it. Usually I do it in the car, but sometimes I have a pile at the end of the day. But
Mm-hmm.
yeah, go and
And
ask.
it's great for organizing. And yes, you have to pay for it, but it's worth it.
Oh,
Now,
absolutely. All right. So,
the other choices would be you could do everything on paper. You could use spreadsheets. You could use accounting software. But then it's all on you to document,
mhm.
to set it up, to set up that monstrous chart of accounts, to list, and then remember to use it daily. Where this, your phone's with you, right there.
Absolutely.
Or you can pay for an accounting service to do it for you every month, but that's becoming the way of the dinosaur.
And let me say, the chart of accounts on TaxBot, just sugar. I'm trying to do this thing, gallery view. Just the chart of accounts where it gives me the categories of what I could, categorize this expense for, makes me realize, oh, I didn't know that was deductible. So when I have somebody come and cut my grass, a portion of that's deductible because it's my home office and I have people coming here. And I'm like, I didn't even realize some of these certain things were like bank fees were deductible until I saw it on the chart of accounts. So,
Right. But don't depend on just that list because there's always more. All right. Like I'm going to get to it more later, but we buy oils and we buy supplies and they're different. And the oils we buy, usually if everybody sticks it in purchases, but purchases by definition is for resale. We might be using it for samples. We might be using it for testing. We might be using it to make other products. Like that big bottle of Thieves Cleaner behind me. Mm-hmm. I've made almost everything out of it, including car wash.
Yeah, I just washed my car with that.
Right? It's great.
Right?
It leaves a lovely shine. Anyway, but there's so many things to do. You can always add more, and more is important.
Well, let's get into what kind of deductions we're able to make, especially for our home office. I know that's the biggest one if we want to skip over to that one because I know we're running a little bit lower on time.
Okay, let me just go back to when we were talking about chart of accounts. Mm-hmm. It's important to have one for each topic, sort every tax item, give you all the management information that you need to make decisions later, break out stuff for each car, repairs, gasoline, insurance for each car, repairs for each rental property if that's what you're into, and home office, separate accounts for the utilities, for each utility, for the real estate taxes, for the insurance, et cetera, and for the maintenance, like in your case. Place for everything, everything in its place. So you wanted to jump to which one?
Yeah, let's jump to the home office since I know that we're running a little bit lower on time. And that's probably that and the car are the biggest deductions that I personally make, unless I'm missing some big ones too.
Okay. Well, home office, should I have one? Absolutely. Why is it so important? Because you get to take a non-deductible item and take a percentage of it, either by square foot or by number of rooms, and write it off. So you get your real estate taxes, the mortgage interest, the insurance on the home, only the insurance on the home. The utilities all broken down for each one. Things like supplies for cleaning it. Things like maintenance and keep the outside. All these different things, repairs, to get your percentage and deduct it on the tax return, but don't give your accountant anything but the full amount for the year because the computer is going to divide it up. And if you're going to get 12%, for example, you don't want to accidentally make a mistake and give him 12%, then he's going to take 12% of 12%, and you get nothing.
Right. So when people are tracking their utilities, put the entire bill in.
Right, and then he's going to break it out
Yep.
properly.
Awesome.
And also tell you what you did wrong. um, also, another major thing besides deducting this non-deductible item is that when you have a home office, you've just increased your business miles tenfold. Why? Because when you leave the front door and you get into the car or a garage and you leave, you're starting your miles right then. Not after your first commute, which is what the IRS law says, for without a home office. So you've really increased your miles because that first commute could be going to a seminar or going to a meeting. So now you've increased everything because you've left from your home office. So that's really important. In choosing home office deduction, they now give you what's called a simple method. Once you choose it, you can't go back. It's a very, very small deduction. I recommend you don't choose it, but you do all the record keeping to do the other one. I've seen people not want to keep the record keeping and they choose the simple one and they don't get very much of a deduction at all.
Agreed. I tried it both ways a couple times just to see, and I always got a lot more with itemizing it all.
Okay, so you wanted to ask about autos?
Yeah, I heard there's a whole bunch of new laws around the autos as well, but are we also up to 51 cents a mile as far as deductions?
I believe for 18, that's correct, but don't hold me to it because I can't memorize all these numbers anymore. I have to look everything up.
My mileage adds up, and I cannot tell you how much better it is having this app track my miles.
Absolutely, because every one you get to choose, personal, business, and it's accurate.
Night and day.
Now, there are tremendous amount of changes in the tax law. You see that 10-inch pile of paper over there?
Yeah.
That's everything that affects 2018's tax law.
Just 2018.
Well, there's some 17 in there, but then the tax law went backward. And so it's what's left over from last year, the new tax law we got in December, the new tax law we got in January.
All right, that makes me need to put more oils on. It stresses me.
I don't blame you one bit.
I'm glad we have people like you.
Yeah, I go where no one wants to go. Autos, SUVs, trucks. I'm going to tell you all the different topics you got to know about rather than try and tell you what to do for you and you and you because there's too many choices.
Mm-hmm.
I mean, first of all, do you buy or lease? Completely different sets of rules. Is your vehicle under or over 6,000 pounds? Different sets of rules. And if you ever want to know what it is, on the driver's side door plate, there's a listing, whether the plate's on the floor or on the side. It says how many pounds your vehicle is. That's easy to look up. New and used is in the tax law this year, so you still get exemptions. Expensing election, bonus depreciation, hundreds of limitations. It really depends on whether or not it was purchased before September 27th of 17 or after that date, because that's in the new law. But if you're a new oiler, a new business oiler in 2018, and you're going to use your car, that's the start date. 2018 is your start date.
Yeah.
So that's when you put it into service. Business and personal, everything's kept by mileage. So no matter what of these laws we're talking about, you still got to compute the mileage. What's business, what's personal, get a percentage, and that's what you get to use. So mileage is key per vehicle. And you can also track the actual expenses versus the mileage, especially with an older car. But still got to keep mileage. Okay. Remember, by having more mileage, having that home office increases it. And what topic would you like to chat now about?
Well, I'm really excited to talk about what the personal portion of purchases are. What is that all about?
Well, the IRS says that you have to have something for personal in all this because you're using it for yourself.
Uh-huh.
But no one says how.
Yeah.
So you kind of got to consider whether or not you are black, white, or gray. Are you black as the ace of spades? You want to step in every puddle. You want to be audited every year. Or are you lily white? You want to sleep good at night. You don't want any problems. Or are you gray, light gray, dark gray, somewhere in the middle. And that's how you make your decision on what you want to do. And if you happen to be married out there, you need to know what your spouse is also by color. This way, you can, by the way, our color charts has nothing to do with my black, white, or gray.
Right.
The personal portion is what you determine it to be. It's totally up to you. It's what you want to set aside for the personal use. So whatever you buy for resale, that's completely deductible. And so samples. And so is testing a new product. And so is making a product from a product. So like if I buy a gallon of Thieves Cleaner and I go to make spray bottles to give away, or I make dish soap, or hundreds of everything that we do, and I'm giving it away to other people, and I'm showing other people, and it's more than just your personal use. It's really hard to say what your personal use is.
Like this cool pain cream that I use to sample in my classes, but I just put on my neck right now.
Exactly.
Got it.
Exactly. And who's to say once you crack open a new bottle, what percentage is? So I heard a Young Living speaker several months ago say that they give a chart, they use a spreadsheet, and they keep track of every drop so that they can never be argued with. And I don't know anybody who's going to do that.
No, I don't.
But I think if you're just being fair, if you give it your best shot, no, there's no magic number, there's no magic percentage, and it's slightly different for everyone. Because Melissa's personal use has been in this for many years. It's going to be a lot less of her total purchases than little old me. But I use it in my business. I use it in my real estate. I clean all my real estate apartments with Thieves Cleaner.
Wow, that's awesome.
And even the most disgusting stuff cleans up with Thieves Cleaner.
I don't want to hear any more about it.
No, you don't want to hear it.
I've heard horror stories.
But I'll be glad to talk to you about that one day, too.
That'll be another Zoom call.
But it's great on windows. It's great on floors. It's great on woodwork. There's never not a use for Thieves Cleaner. But I just think that you need to be fair with yourself. If you want to be black as the ace of spades and take 100%, it's going to be hard for them to argue that there's a personal portion. Unless they go into your shower and they see a bar of Thieves soap that you decided to leave there. But then who's to say that your essential rewards, you got it for free through all your different essential rewards, that your personal portion isn't your essential rewards?
Wow. This is a hot topic.
Right. So I'm leaving it all to you.
Yeah.
I will never tell someone whether they're right or wrong when it comes to a personal portion, because it's really an argument.
All right, but at least
I've been on both sides of the table for arguments.
But I have heard that at least there's no argument with deducting your $100 a month order if you're getting commission checks, because that's what you need to purchase in order to be considered active. It's the cost of doing business, and in order to get your full commission check, it's 100 PV. So that one, that's good, right? So that's kosher, even if you're using it yourself.
It's proven. It's been there. It's been time tested. So it's going to be impossible to argue.
So go ahead and make sure you don't forget to take photographs of your Young Living invoices, people.
That's a really good idea to keep track too, because
And they are available in our back office, even from very long, far away. So that is easy. Like if you have been
not,
track of your
yes, Young Living is, but not many other companies do that.
but it would be worth it to even go back and amend probably just your Young Living purchases if you haven't done that. Anyway.
Yes, for at least 3 years.
Okay, so I know we have just a little bit of time left, and we had some questions about meals and entertainment as well as hiring your children. I didn't know if you wanted to take one of those or try to squeeze.
Okay. Well, let me do hiring your children. It's real short, real quick.
Okay.
Children under 18 years of age, your children can be employed by parents, has to be on a Schedule C, which is your Schedule C tax, part of the tax return, sole proprietorship, or a partnership where the parents, both parents, are the partners, nobody else. So it doesn't work for S corps, it doesn't work for corporations, and you must have assigned duties, and the children must be able to perform them. So infants don't work. You can't have your infant doing this, all right? Now, it's not subject to Social Security, not subject to Medicare. It's not subject to FUTA, which is the federal unemployment, or the state unemployment. But even though you're paying a little bit of income tax, it's a lot less than what you're paying for that money if you pull it out of your pocket and gave it to the kids as their allowance. And because they're in a much lower bracket than you are, so there's definitely a savings. Meals and entertainment. Entertainment, bye-bye. Amusement, recreation, or membership dues, they're gone.
Oh, really?
They're gone. There's no longer allowed to be deducted.
So box seats are no longer a deduction for these big companies too, I heard.
Correct. So unless it's done like via a charitable thing. Now, there is an argument. Remember, none of these new law, the IRS has not come out with pronouncements yet.
Mm-hmm.
They're holding back. So, can you take entertainment and consider to write it off as promotion or advertising if it's well documented? I don't know. It's not defined yet. Maybe it's an open door, and maybe it's not. No one's going to know till later in the year or next year. But they've also kiboshed things like if you bought snacks at the ball game or a beverage at the ball game, nope, that's out too.
Wow. So
is dinner before the ball game. That's also out. But our normal going to see a client or with another officer of the business or another meeting, all those meals are still 50% okay.
And then if I have a meeting at my house and I bought food specifically for people, that's 100%, right?
That's correct. And that's still allowed. And that's right up there with the rules for having a Christmas party or a party for marketing for the general public or an open house or a party for employees with spouses or for any kind of team building. Which is what you live for that.
Oh, see, I thought, but if it's out at like when we go to coffee shops and it's like a meeting, that's only 50% though, right? Unless it's
that's 50%, right?
All right, let's start meeting at my house more, everybody.
Right, but you only can write off for the food.
Right.
Okay, there's no service charges. You can't add your own service charges to it.
No tips.
No tips. Now, another thing that with meals and entertainment that's really important is if you bought something in a charity organization, the charity portion is deductible for entertainment. The cost of the occasional holiday party, that's okay. Anytime you take an employee to lunch, a client to lunch, you meet with another upline, all those meetings are general meetings, but they got to be documented. You've got to put down the business purpose. Mm-hmm. And it's important. And you got to stop using one word for all your business purpose. Marketing is not a qualified word anymore. Yeah. You have to say blue azul sale, or you have to say um, meeting to discuss new prospect, something that is different every time. I know that I have a friend I go meet and I always buy lunch because he's telling me how to do new apps on my phone. And it's telephone training.
Yeah, I've learned to get a lot more precise. I used to just say, oh, Young Living, meeting with Tara. But now I'm like, Young Living meeting to discuss our next rally. Like I've gotten very specific, and I didn't used to be because I didn't know.
Right. And that's so much, it's really not hard, especially since everyone's got so many different things they could choose. Not that hard.
So I know we had a few more questions, but we are just about out of time. So we could continue this conversation on another Zoom call and people could ask more questions. We could continue the conversation online. What I want to know is how people get a hold of you, whether they want to hire you as an accountant, a consultant, they need to restore records, which is not cheap. If they have any estate questions, I know that you really have a lot of expertise. So how can people get a hold of you?
Well, you can call me direct on my cell phone at 570-947-9329, 570-947-9329. You can find me on Facebook. You can find me in Messenger. Messenger would be really easy because I'm an oiler, and so everyone can find me on any one of our oily sites.
I'll be sure to tag you as well on these posts so people can just tap on your name.
Or you can bump into me either here in Scranton or in Boca Raton, where I spend time also.
Nice. Because I know we had more questions that we didn't get to about LLCs and different entities that you could choose from. I know most of us are all sole proprietors so far, but I think I definitely would like to have a conversation with you about potentially creating an LLC, because at a certain point, I know that makes sense, but
you want me to start talking about it? Do we have time?
Let's see. We might get cut off at some point, but yeah, let's see real quick.
Okay, well, first of all, you got a sole proprietorship, which is a Schedule C, and it's the simplest, easiest thing to open and close. So you can just start, okay? And you probably have to open up a checking account, but you can do it under your own name. Mm-hmm. You don't need a special ID number, and you'll be taxed for income and Social Security. If you wanted to have a partnership with other people, it is also, you have to file papers and get an ID number, and it's more work, and it's also taxable for income and Social Security. Corporation, a lot more work, but you got the flat tax now at 21%, and you got unlimited benefits. So where you get stuck in a pocket with S Corp, you got all kinds of limitations on your benefits. With C Corp, you don't. Many, many benefits we don't even think of today. And S Corp, it flows through onto your personal return, and that's how you're taxed. And again, with both corporation and S Corp, you can have salary, you can have dividends, and of course, dividends are a much less way to be taxed. And with an S Corp, you have limited benefits, but you're only taxed on income, not Social Security, and not local. So there's all kinds of factors to look at.
What? Not local?
Yeah, how about that?
For someone living in
Scranton. Your salary is, but not the investment in an S Corp.
I should have done this a while ago. Continue.
What I want you to do, think of LLCs, because everyone wants an LLC or thinks about it, but they don't know what it really is. An LLC, I want you to think of it as a giant garage. Now, the car we drive in is going to determine the type of taxable entity. It's going to determine whether it's a individual sole proprietorship, a partnership, a corporation, or an S Corp. So it's just a big garage. So we're going to drive in a car with one seat. It's a single member LLC, and it gets taxed right to that individual. You're going to drive in a car with bench seats. That's for all your partners, and everybody gets a separate K1 that says how much is their portion. You're going to drive in with enough bucket seats for every shareholder. That's a C corporation. And the corporation gets taxed at 21%. Everybody else gets dividends or they get salary. And when you drive in a car that's a corporate car with bucket seats, but like the Flintstone mobile, it has a hole in the floor and everybody's pedaling and they're being taxed to their individual tax return. So an S Corp has just as many seats, but everyone has to pedal and pay tax themselves. And that's the real difference of how to think about your entity, because you have to choose a taxable entity. Now, there's some really good things about an LLC that we should talk about, and that is that you can change. So if you're a single member and you want to become an S Corp LLC, you can do that. It takes a lot of paperwork. It can't be done like that, but yes. And yes, you have to change things around, but it can be done. Where all the others, you have to set up something new and stop and start on a specific day. And there's limited liability with an LLC, where like a partnership, there is no limit. Every one of your partners, you're eligible for all their debt. That's a real problem, but not in a limited liability partnership. So all good things to think about, lots of choices, lots of tax choices.
Well, Bobby, I cannot thank you enough for your time on behalf of everyone in our oily community. Thank you so much for continuing to be a resource for us. And I will be sure to tag you. And if it's okay, I can put your phone number online too.
Sure.
And yeah, I know that I need to learn more and make some changes. I think I'm missing out on a lot of things. And
well, anytime you want to sit down, just write yourself a whole list of questions. Because it makes everything go smoother.
I've heard that once your commission checks gets over $3,000, you should really consider an LLC. And I'm like, I've been considering it for a while and haven't really looked into it. So I need to. So maybe
absolutely. And
talk soon.
It's always a big difference once you're able to make that step of choices. It's nice to have choices.
Yeah. And I'll just also mention, once your commission checks gets to be over $3,000 with Young Living, you could also, and I haven't done this either, write to the company to make sure that that is willable. So if anything happens to you, it goes directly to a family member or whoever you will it to. And that could be done, I think, right through, I haven't done it yet, but through Young Living, anytime your check is over $3,000. So, I mean, this is a business with a lot of opportunities, including it being willable, which is fantastic.
Okay, and if you don't have a family member, I can be adopted.
Me too. Adopt me and cook for me too.
Absolutely.
Bobby, thank you so much. It was a pleasure. You're so fun to talk with, and let's do this again soon.
Be glad to. Thank you.
Bye.
Bye-bye.
Thanks, everyone.